Joining us now, Jason Trennert, Chairman and CEO of Strategas Research Partners, a Baird company who, in some of your recent appearances, you're not quite as happy about the way things are going. Is that still fair to say? And what are your concerns, Jason?
Joe, I think that's fair to say. I think obviously the second year of a bull market, which we're well into, is harder than the first, and you have you obviously have a lot of challenges that are ahead of us. Not the least of which is Fed tapering. You also have a budget, which will likely include tax increases, and you clearly have higher inflation. I think the goalposts on inflation being transitory were moved earlier from earlier this year, where it was considered to be a couple of month phenomenon. And now here we are in August, and the numbers are much higher and have lasted longer than people suspect. So you put all those things together, I think it's just hard when the market's trading where it is to get particularly excited about at least multiple expansion, which would suggest that the returns on the market will be lower moving forward.
So knowing you as I do, we can have corrections and pullbacks, but stocks over time go up, and there's usually a secular bull can last a long time, and I don't know if you're casting that viewpoint aside. What needs to happen in the next couple of years, or let's say the next year and a half, and then after that next 2.5 years? Are there things that you think if we fully went all in on the Euro-style entitlement state, which is, we're taking these aren't baby steps anymore.
We're getting closer.
We're hearing what entails infrastructure is basically an entitlement state model from Europe, and we know how that works in terms of, and supposedly it's going to be paid for. If it's paid for, it's going to be by higher taxes on the wealth creators. If it's not paid for, it's going to be printed, which means that slows growth down the road because you're paying debt service. Would your whole thesis change if all these things came to pass and if it didn't get rectified at the next election?
Well, Joe, the one thing that is different between the U.S. and Europe is, and it is partly because of the system that we have, it is much more entrepreneurial, and we have sectors like technology and healthcare. Right, precisely. And I think particularly as it relates to some of the taxes that are being discussed in this new infrastructure bill, the GILTI tax, there is a chance that you kill the golden goose. And so it seems to me it's clear that European stocks, while they might be doing well now, have traded at a discount to U.S. stocks for as long as I can remember. And there's a reason for that. And that is because you don't have the types of innovation and entrepreneurship that you have had in the United States. And so it's no divine right, I would just say this, for the United States to continue to have innovative companies. It's no divine right for it to have the reserve currency. Those are hard things to lose. I'm not saying that we're at risk of losing them imminently, but also if you're a student of history, you realize that there are many societies throughout time that have had the reserve currency or were the center of the universe economically and lost it through bad policies. And so I believe in American exceptionalism, but I don't believe it's so exceptional that it can withstand really bad decisions over a long period of time.